Today, I'm going to explain to you all how an IUL actually works. Now, a ton of agents try to explain this concept, but a lot of them overcomplicate it. So today, I'm going to explain to you like you're 5. Pretend you're John. The way this works is John invests $1,000 per month into his IUL policy, or an index universal life insurance policy. So you take $1,000 from your income and you put it with an insurance company. When you set it up the right way to maximize cash value, a small portion of your premium will go towards your death benefit. In this example, let's call it $250,000 or $250,000. Now, day one, when you get approved for the policy, you have this death benefit in place. So it doesn't matter if something happens an hour, a day, or 50 years from the point you sign up, you'll always have this permanent death benefit ready to go. God forbid something happens to you. Now, the exciting part, the larger portion of this premium gets invested into an index fund. This can be the S&P 500, it can be the Barclays, or it can even be a BlackRock fund. Either way, it's going into an index, however, it's tied to it. What this means is you're not fully exposed to the index. So on average, we see these IULs accumulate at an average rate of 7 to 10%. Now it comes with 2 guardrails, the first being what's called a 0% floor. What does this mean? A 0% floor essentially means that if the market or the index were to go down in any given year, you would never lose a single penny of your cash value. The other side of this coin, you have what's called a 15% cap, meaning you can grow up to 15% per year in these accounts. However, I don't want to sell you a fallacy, right? On average, we see these accounts grow at 7 to 10% per year, but keep in mind, they can go up to 15% per year. So each year, you're taking advantage of compound interest and the cash value in your account is going to grow. Now, in this cash value account, which is essentially your own bank, you're able to borrow from at any given time. So the policy is 100% liquid, meaning you can use the cash value that you build up regardless of what age you are. A lot of us invest in things like a 401k or a Roth IRA or a traditional IRA. Now, although these are great financial vehicles, the issue is you're not liquid, meaning you have to wait until you're 59 and a half before you can touch a penny of these retirement accounts. In the case you do, whether it's an emergency, a medical event, or let's say you want to start a business, not only do you get taxed at your nominal tax rate, call it 28%, but you also get a 10% penalty from Uncle Sam. Meaning, if you need to access your retirement accounts like a 401k early, then you lose almost 40% of the money you're taking out. Not very advantageous, is it? With the IUL, like I said, you can use that money at any point during the policy to take a loan out against the policy. Now, keep in mind, it is a loan. Therefore, even while you're using the cash value in your account to start a business, go on a vacation, or have your dream wedding, what's happening is while you pull that money out, it's still going to grow and compound in the account as if you never touched it. Now, let's say once you take your loan, you want to pay it back. You start a business, you make your investment, and you make your money back. You can simply just pay the money back into the policy to make it whole again. Now, in some cases, some of my clients, they actually don't even pay their loan back. They just let their future growth pay the loan back for them. So this way, you can replenish your policy, or you can just let it continue to run and grow as is. Now, keep in mind, as you use this money and you grow your financial wealth and future, it is 100% tax-free. So once again, going back to your 401k, if you use the money, even after the age of 59 and a half, you're going to pay taxes on it. In an IUL, when structured right, while your money grows and you use it, you do not pay a single penny in taxes because it is wrapped inside a life insurance policy. This is the advantage an IUL gives you that you don't get with any other traditional retirement account. If you're John in this case, not only are you able to increase your financial future, protect your family from day one, but this ensures that you stay tax efficient throughout your retirement. Because it's not, at the end of the day, it's not about how much you make, it's about how much you keep. If you want to learn more about how to structure an IUL and get a realistic number that's pertinent to you and your family situation, book a free call with one of our representatives today, and let's see if we can help you out.